So longer term, like if you ask me where Bitcoin is in 3 to 5 years from now, I think it's way higher than here.
Yep,
In the
yep,
near
yep.
term, it's not something I'm chasing. I'm much more looking to unload positions in it, and kind of look for pullbacks to buy or even new lows. So again, I just use that mentality. And again, listen, maybe we don't get new lows, but ultimately, you want to be ready. Like I wouldn't want to see someone putting all their money to work now at 22,700 where it is, and then all of a sudden price comes back to 19 or 18 or 17, and they're like, oh crap, I put all my money there to work, now I can't buy any dollar cost averaging. Instead, if you're really intent on buying, okay, but use a small amount. This way you have maneuverability to kind of buy on a dip here. And then this was where it just went to sleep, right? I mean, it was just no volatility. This is where you had to exercise patience because, you didn't want to be jumping long or short in here, and it was just chopping people out. But once you got this break up, it was like a melt up. We went right back to the technical. Look at where price consolidated, right? Where it couldn't
Yeah.
break through initially, that FTX high. And then it finally did. And we're actually starting to consolidate again. So at least in the near term, there is a chance that we could go up to 25,000 on Bitcoin here, before running into some major resistance. The only thing I would dare say is that for me, at least, I still have a core position with my members as long on Bitcoin. But I would actually, if we get to 25, I probably unload that and I probably start looking at turning it into a short for a pullback. Like all of the things that I'm seeing in the Bitcoin market right now are not the telltale signs that a bottom is in. For instance, exuberance, like irrational exuberance, people just getting so crazed about Bitcoin when it's only moved up. And again, you could say from the lows, it's moved up, what, 50%, but really, in the scheme of zooming out on the chart, I mean, it is still way down here, but bullish sentiment is scary. It's almost as if we were all the way back to the highs from what I'm seeing on Twitter, at least. So that concerns me a little bit. One of the keynotes of a bear market really being bottomed out is that the first 20, 30, 40, 50% up, people are so skeptical and scared that they're not believing it yet. In this
Yes.
case, we're not seeing that. We're seeing all this bullish sentiment come back in so to rip higher, and then a lot of the other cryptos did follow suit. So in that same vein, and again, I don't know if this is something we really want to trust, but if Litecoin started to roll over, do we then say, okay, let's be careful? Maybe the rest, like, is it becoming a leading indicator? Which again, I don't know. I mean, that's a really tough thing to think about. Is Litecoin all of a sudden the leading indicator for all of crypto? But it would be something that I would just pay attention to, right? Does Litecoin kind of roll over? Does then the rest of crypto roll over? One of the things I do look for is divergences, right? So if the RSI, let's say price was at $10 and the RSI was at 80, and then price goes up to $20 and the RSI is down below that, right? Let's say the RSI is only at 68 instead of 80. That would be a negative drop in RSI while price is going up. And we refer to that as a negative divergence. Those actually do tell you stuff. That tells you that big money's unloading in that situation into that move. And again, that's more of the way I use it. I think the biggest thing is just to remember not to chase, right? The more hype you see on Twitter, the more, when you see Bitcoin trending and stuff like that, it's going to naturally create an emotional trigger within you that's going to be like, oh my gosh, I'm missing out. I got to jump in here. But really what you want to do is look at the chart. And if the chart has rallied, in this case, from 16 to 22,000, even topping out above 23,000, you need to be able to say, listen, if I was going to the mall today and last week these jeans were on sale at $100, now they're $1,000 jeans. Would I be saying, hey, I got to buy these $1,000 jeans? You'd say, no, I'm going to wait for it to come back down, the price to come back down. You need to treat investments the same way. Buy them when they're down into support, when they're on sale, essentially. And I think that's one of the biggest issues that people have. It's that people aren't treating it like going to the supermarket and looking for what's on sale. They treat it like, for some reason, oh, I got to chase this even though it's up 3x or 4x from the lows. And that really is where people get in trouble. Ask anyone who bought in the 60,000 range on Bitcoin, right? It's like anytime you invest your money, if you're not taking responsibility for that investment, it's just ridiculous, right? I mean, again, you're investing your hard-earned money. You better take responsibility. You better do what you think is going to happen or what you see is going to happen versus listening to anyone, frankly, about those investments. So yeah, I agree. Nothing's guaranteed in the markets, and people need to understand that it's all a probability game. And so when I make my predictions, it's all based on probabilities, which means there's always even at 80% chance of success, that still means 2 out of every 10 times I'm wrong, or 20% of the time it's going to be wrong. And you have to take that into your investing. And the way that I do that, right? So this is really important, is that because I know I could be wrong on any trade, what it does is it keeps me from putting too much money in any one trade. So this way, if it happens to be one of those ones where it doesn't work out, okay, so I take a loss, but it's not a blow my account up loss. And I think that's where people have to get to as investors, to start recognizing that any trade can go against them. So don't put all your account in one trade. It's ridiculous.